Hello and welcome back to the MCR Accounting Financial Literacy Series. We're currently running a series of videos based on the T forms that non-standard taxpayers, as in not Terry and Teresa the taxpayer, who each have a single T4, a couple RSPs and a TFSA, the people who are reporting on forms other than T4s and T4A type forms. So we've already covered the T2200, statement of business expenses, employment expenses, that some T4 earners are now finding themselves in possession of. It can get very confusing with some of the higher level forms, and so that's why I covered it first. You're still basically a T4 earner, just your employer has, I call it, offloaded some of the costs of employment onto yourself through the T2200. Then we covered the T2222, the Northern Residency deduction, and admittedly that one is quite geographical in nature, and it only applies to people that live in this area, but it's important in understanding that if you live in a Northern Residency prescribed area, you, just by that one single fact, are not Terry the taxpayer. You have a special tax situation because you're filing one of these special forms. So we covered what that looks like, and I talked to you about, the type of financial hygiene and record keeping you need to do for both of those forms. So now, today, we're going to move on. This will be the most ambitious financial literacy video I've undertaken to date. We are going to talk about the T2125 Statement of Business or Professional Activities form. Millions of Canadians file their taxes based on this form. If you are an unincorporated business, also known as a sole proprietor, could also be a small partnership up to as many as 5 partners, then you will need to be filing via the T2125 and the associated forms. And in order to defend your rights as a small business person, you're going to need those key things we've talked about in the past 2 videos. Good, solid, accurate, permanent records. You absolutely, the biggest portion other than what you directly contribute to your business, the next biggest portion of your ability to succeed in business will be based on your record keeping, what I like to term for financial hygiene. And financial hygiene needs to be a lifestyle thing for all of us. And financial hygiene is what makes it possible to do proper tax preparedness. Okay, and that's kind of the stuff I'm talking about. My feeling with all of this stuff is that all of you want to get this right. You want your business to succeed. You want to pay the lowest possible tax burden. So why do we and almost all the other preparers that I've ever talked to see the same thing year on year? Clients coming in with insufficient paperwork, insufficient data to back up the statements that they rightfully would have a right to. My assumption is the reason that people are not doing that is because they don't know, right? This is too important for laziness to be the likely explanation in 99% of the cases. Not saying that isn't the case in sometimes, but my assumption is that most of what we're seeing here is due to people just not knowing. And so that's what the point of the series is. And we're going to move right on now and attempt to address the T2125, Statement of Business or Professional Activity. So First off, there used to be more forms. This used to be a series of forms, and which in some ways made it less confusing for people because different types of taxpayers were filing different types of forms, and therefore, when they ill-advisedly are advising each other over breakfast, they weren't necessarily leading each other as far astray as can happen now. Okay? So this form is going to cover basically all of the self-employed individual, non-incorporated individuals, other than farming activities, which will be on a T2048, and we will be talking about the T2048 in an upcoming video. That will be, it will be trumping this one in terms of complexity. I'm not going to even attempt to do, I believe it's called the 2121, the fishing activities one. If you look at where MCR accounting is situated on your Google map, it would make sense that it would be completely out of line for us to, even be speaking about fishing issues. We don't have any of that kind of clientele, so we're not going to attempt to address that. So the very first thing on the form that is way neglected, and this, honest to God, is, in my opinion, being neglected by professionals, tax preparers, as well as by the client themselves. And there can be many different reasons for that. But I see a lot of new clients come in that have an ongoing thing where, my first observation is that their North American industry classification number is not accurate for the business that they're running. And it's important that it's accurate for the business that it's running, because this number, this innocent looking number at the top of the page, this is what the CRA assessors are going to use at the very top level to decide whether everything else that you put on this form is in line with the type of business that you have just claimed that you're running. So here's where the problem starts. You click on this, and it's a great, long, never-ending list. And people don't like that. I get that. Remember, this is your livelihood. You cannot let yourself be scared off just because it's going to take a little bit of reading and understanding. Same thing if you're not doing this yourself. Maybe you're bringing it into us. Maybe you're bringing it into some other preparer. Take the time at that very first meeting to make sure that your tax preparer clearly understands what your North American industry classification number is. Right? I see this being filled out sloppily all the time, and it doesn't always have negative effects. I don't want to overstate the case, but it can. It can be a reason in the background why year on year on year you always seem to be getting reassessed. You can never get this filed in such a way that they're gonna accept your work. Maybe you don't have this number correct, and maybe that's why you're being called out year on year on year. So first, we're going to go back to talking about the coffee circle, right? Nothing against having friends, nothing against socializing. I've got a lot against people getting their tax preparedness and financial hygiene advice from their friends in the breakfast club or the coffee circle, right? Unless you're in a breakfast club that's filled with accountants and tax preparers, and then, giver. But most of you are not. So right away, we can see an example of what I'm talking about at the top of this form under Select Statement and Fiscal Period. Now you have 3 people coming to the breakfast club this morning. You have a businessman. That's you. You have an architect. She's running a professional office in downtown. And you have a friend of hers that she's brought along to introduce to you who has just opened a insurance business and gets a substantial commission income because of that. And the 3 of you are now discussing the various different things that you and your tax preparer and accountant have done with your 2125. Stop. I mean, if it's just for interest's sake, that's fine, but please don't think that you can do your tax planning based on the advice from these 2 people. because they're not speaking the same language as you. And this is back to what I've talked about in several past videos. You cannot come to conclusions about your tax picture based on other people's tax pictures, right? It should just be plain, but it's not. And the reason it's not is because these forms look the same and appear to be talking about the same things in one area after another. And, you know, people just don't know. So that's what I'm trying to help you out understand. Identification, well, you know what, if you need my help to identify yourself, then I'm probably barking up the wrong tree here. However, I do want to point after that long spiel about no, your Breakfast Club people are not speaking the same language as you. Right away, as we come down the form, we run into this. You run into this nice, innocuous-looking box in the middle that gives you the idea that you get to choose whether to do, you know, a much, for most people, easier to understand cash accounting system, or whether you're going to do accrual accounting. You don't get to choose. Read carefully. Come back with me and read again. Commission only. Can you see the small print? I wish they wouldn't do that. I wish that was just as big as where it says accounting method, but it's not. So then, this person here is talking to you and your professional friend about things that don't have anything to do with you, right? Yes, they file on a 2125. That's where your commonality ended. They file on 2125, but they file as a commission, as a person who's paid by commissions. Internet activities, pretty straightforward. They want you to put in, do you have websites? Do you have web pages? Maybe you've got an account at Spotify or Amazon, or all of that material goes in here. And I know there's a lot of suspicion. You know, I don't live in a really super urban area, and maybe that's why. So in the area I live in, there's a lot of suspicion when the CRA asks questions like this. So I don't have the answers for you. I just would like to remind all of everybody listening, this is Canada. We are Canadians. And I don't know of any case where it would be reasonable to say the Canadian government has been involved in nefarious black arts activities against their citizenry. I know it's a popular thing to get all passionate about, and whoever happens to be sitting there at the time is always the dumbest person on the entire planet, yada, yada, yada. But let's be real. You know, there's many countries in the world that none of us would voluntarily move to because they are nefarious by nature. Canada's not. You can provide your provider with this information or not as you choose. You can fill it out or not as you choose. But honestly, I can't get behind any belief that there's any nefarious purpose to the government collecting this data. So that's all I'm going to say about that. The people that believe those things, there's no point in me arguing with anyway. So now I'm going to point out we have two parts to the form at this part. 3A for your business income. That's the people that we're imagining ourselves to be. 3B for professional income. Only professional income. Okay? And again, as we go through these forms, remember that one of the primary tenements of the Canadian tax system is to use precise language. We've used the word specific over and over again. So when you're reading these forms, don't confuse yourself wondering what that means. What it says it means is always what it means. This is not like a lot of other things in life. This is not any kind of passive-aggressive thing. The words mean what they say, and they say what they mean. Okay? So we're moving on down. This is the first number you're going to enter here, and this is going to be your total revenue for the year, whether that was sales or commissions or a combination of both. The money that you made for the year, that gross number, unadjusted for anything, that's the number that we're going to put up here. Now, right away, two things I'm going to say. Remember, if you're using electronic software, which most likely you would be, the white boxes are boxes inviting you to fill them out. The gray boxes are boxes that are going to generate from somewhere else. Don't get in a panic. You can see, remember what I said about precise? Do you have a T5013 slip? And does it have anything written in box 116 or box 122? Do you have that? If you do not have it, then just move on. Don't get yourself wound up over this. It means exactly what it says. You don't know what a T5013 is? That's because you don't have one. You don't need to get stuck on that. You don't have one, move on. Okay? Same with all of these things. They tell you where those numbers would come from. If you had a T4 slip with a box 020 or an 028 or an 048, then when you entered your T4 slip, it would have populated these boxes. Okay? So you can just move on. But I don't want you to move past this section. We have a principle that these forms, part of what these forms are trying to do is to, I've used the general term that these forms are to help keep you whole, make you equal to Terry and Teresa, the taxpayers. They also at this level now start to have other uses. In Canada, for the most part, with the exception of a couple of provincial sales tax issues, which I'm not even going to bother to go into, but for the most part, it is not the intention anywhere in the Canadian tax system that any taxpayer pay tax on a tax. Again, the only exception is some forms of sales tax. Okay? Not even that big a deal anymore. It used to be a really big deal in Canada when we used to have federal sales tax, because the federal sales tax was often put on way in the background and then everything else piled on top of that, just as a bit of history. So the principle is that we don't pay tax on tax. So if you're any kind of a business where you're bringing in materials or even a resale business where you're buying things and reselling them, then you will have paid tax when you brought them in. You get to deduct that GST, PST, or that HST, depending on which province you're in, at this point in your claim. And you're doing that, that is going to lower your total gross income, which eventually lowers your taxable income. But the more important thing in this part is you do not want your clients to be paying taxes on their taxes. So you have to deduct this part out so that the GST or the HST or the PST only gets paid once. It gets paid at the end. It gets paid when you sell your final product. And this is why you want to have a PST number. This is why, if you're serious about running your business, you're serious about your record keeping, you're serious about having a business number, you're serious about having a GST number, a PST number if you need it, because that's what the point of the business is. Okay? And again, if I'm an assessor and I'm trying to determine quickly as I go through all my files that the computer is pulled out because the algorithm says I should look at them, if I'm that assessor, I'm going to be looking here, and if I'm not seeing, a certain level of business intensity, let's call it, involved in this record keeping, and I've already got the algorithm pulling your file telling me that perhaps this business was never intended to make money in the first place. You see where this goes? Now you've got my interest. Now I'm going to want to talk to you, right? So again, if you were thinking that you were going to run some kind of a marginal business, and if you don't accept what I'm telling you, that in Canada, starting a business for the sole purpose of losing money to get a reduction of your T4 taxes is not a thing. I don't care how many people have told you this over coffee or over breakfast. It is not a thing. It will get you in trouble sooner or later. It is the expectation of the CRA and the Government of Canada that any company has a reasonable expectation of profit somewhere. You cannot have a company that is solely intended to lose money. Now, that being said, there may be guidelines. You might be starting some kind of new business that's going to take a considerable long time to ramp up. And the first time you fill out your 2125, you may sit in a reassessment situation because, the assessor wants to know, it doesn't look like you're going to make money in 2 or 3 years, so is this a serious business? You can walk him through that or her through that, and you can show that this is a legitimate business, even though it's not going to make any money for, say, 5 years, right? So you don't need to be making money right away, but you definitely need to have the ability to make money. And again, like I keep reminding you, keep in mind that the people that work at the CRA and the people that work at the federal government, they're just as clever as you and I, right? So anything that you can dream up to try to slip under the carpet, they've already seen, they've already thought of, and they're already going to catch you. So we're just not going to do those kind of things. We're moving on. Your professional incomes, again, if you had professional fees, right, they go in this box. Now, I do know that you could have professional fees as well as a T4. You could have professional fees as well as a business income, right? Just know that those things have to be separated out, okay? So what is the gross business or professional income? Well, some businesses, as they grow, they pull reserves forward from last year into next year, then that becomes part of your operating capital for this year. And some businesses have a continuous influx of capital cost allowances. This is the section where that's going to come out. Mainly, if you do have cash reserves, you're going to put that in here. Also is going to go in here, other incomes. So, primarily you sell gadgets. And you had you've got an extra gadget making device, and you've rented it out for a short period of time to another company. It's not really a part of your business, but it is an income. It did bring in money, and that's where you're going to report that. Okay? Cost of goods sold. Let's spend a little bit of time here. A lot of home proprietorship businesses that I've dealt with are ultimately selling something. And they produce that something out of materials they buy, or sometimes they're just reselling something. In either case, there is an inventory of, call it raw materials or raw goods or trade goods, whatever you want to call it. That inventory, that is a part of quality financial hygiene. You really can't expect to run a successful, profitable business merchanting in goods if you're not tracking your goods. Okay, so this is where I talked about, things that clients could be doing to much better prepare their own defense and be able to stand up for, the costs that they rightfully should be deducting. Okay? So opening inventory. Where did you get your opening inventory from? Well, you should always, always, always in that type of business be doing a year-end inventory. And that's an inventory over your finished goods, an inventory over your manufacturer, all of the parts and pieces that go into the thing that you're selling. You should inventory that. You should know precisely. And when we talk about inventorying in our world, we don't want to hear a number like, I have 20 or 30 quarter-inch bolts. We want to hear precisely, we have 29 quarter-inch bolts and 28 quarter-inch nuts. That's inventory. Where'd your opening inventory came from? It's the closing inventory from last year. So in December last year, you completed an inventory. That's the number that goes here. Your tax preparer has no way of coming up with this number. This number has to come from you. It has to come from your practice of financial hygiene. Unless you really want, and this just is not done at the proprietorship level. If you need a professional to verify your inventory, you are talking about a full audit review. And I don't know of any proprietorship companies that are going to be wanting to participate in that. You have to look after yourself. That's the whole point of this series, is trying to convince people to look out for themselves. That's the basis, I talked about it on the very first video. The basis of the Canadian tax system is that we are a self-assessed tax nation. And the records that our tax picture is built from are the records we compile, produce, and keep. And if we don't, then the CRA doesn't have to take our word for it. Okay, I think you understand that. I think that there's very little in life where we take our word, anybody's word for things. Okay. So then purchases during the year, right? So this is just your ongoing inventory, right? As you're adding inventory in, it's going to be here. So you'll have both of these numbers are actually going to lead all the way down to your closing inventory at the end of the year, which is then going to be your opening inventory at the beginning of the year. Okay? It is really that simple, that sensible. I know sometimes people look at these forms and they can seem so intimidating. And that's why I've been quite strongly worded on the take the time to read it. Understand that this is not a document from a lawyer's office, right? Documents from lawyer's office, yeah, you probably are not going to understand what was said by the time you get to it. But these tax forms, they mean precisely what they say, okay? So just take the time to read it, or come on in and see me. And I'll walk you through this in person. Like, honestly, I will. Just come on in and see me. If you want to try to do this yourself, right? There's no better way for me to show you that perhaps if you've got a going concern proprietorship, that it is time to bring in the professionals, than by walking you through it. So either I'm going to successfully teach you how to do this yourself, or I'm going to convince you why it is worth your time to pay for the service. Either way, you're still going to have to produce the data, right? Whether we compile the form for you or not, the data comes from you. Do you have employees? Do they have direct wages? I mean, that is part of the cost of building your Gidget, right? Do you use subcontractors? Maybe there's one part of the Gidget that you don't make yourself. You got a buddy down the road makes them. Again, it goes into your costs. Other costs. Are there costs that the CRA was unable to forecast in this list that are legitimately a part? Now, keep in mind, this is different than when we were talking about the 2200, where the CRA is telling you right at the top of the form, this gives certain T4 tax earners the right to claim back specific charges. This is not as specific as that. That being said, you might still have to go through reassessment, and you might still be turned down in reassessment. But the degree of success in defending 2125 claims in court is quite high. It is quite high. The ruling that the tax judges will have in their mind, the thought they'll have in their mind, if one of these cases, if your case has to go all the way to a court ruling, what the judge will be thinking is, would another reasonable business person have had these same claims that you're having, right? In other words, is this some pie in the sky thing that no actual experienced reasonable business person would have done? Or did you spend this giant chunk of money because you're going to gain a 30% increase in revenue year over year because you did it, right? That's how the judge is going to look at it. your CRA assessor will be looking at it much more from a formula point of view, right? Like, does it fit here? Does it fit here? Does it fit here? Does it fit here? We try first to make sure, whenever possible, that we compile our work in such a way that the CRA assessor will be able to understand how it fits in with the legitimate costs of doing business that this form is presenting for us. Sometimes, you have a business that maybe nobody's ever heard of before and maybe are going to have to defend it. There is not anything I can tell you that 100% guarantees you won't be reassessed. I can only just keep reminding you that this is Canada. And in Canada, we almost never take people out behind the woodshed and shoot them for making mistakes on their tax filing. Okay? We will ask for the money back. Net income or loss before adjustments, right? That number came down from up top here, right? As we came down from the form, that number just followed us down, and now it is sitting before adjustments. I want to point out the before loss. So you are now in a stage where you can lose more than you make, right? Now, I talked earlier about the expectations of the CRA about it not being a fake money-losing company, but many, many types of companies lose money year on year for a period of time before they get up and going. And that is an understood concept. And because it's an understood concept, losses for these types of business can be carried forward against future earnings. Okay? I'm taking the time to say that because I believe that one of the potential reasons I'm not getting the data supply that I would expect to fill out this very, very important part of the form is because people are, well, I'm not really going to make any money, and so I didn't bother keeping all those records, and it's tedious anyway since I knew I wasn't going to be a profitable company this year. Well, those losses could be there to help you out next year when you are a profitable company, or the year after when you are a profitable company. So is the hygiene of tracking your expenses worth it right from day one? It is. I mean, it is a normal expectation that you're going to end up in a loss this first year at least, but the magnitude of that loss is best to be kept accurate because you can carry it forward with you. Okay? So advertising and promotion are kind of looked at a little bit differently, but they really are the same thing. So I'm going to talk about advertising and meals and entertainment both at the same time. So to start with, meals and entertainment, I'm just going to say, again, we're going to go through the exact words, and you're going to remember what I said about specificity of the way CRA writes these forms. But I'm just going to say this before we even start reading. There is no intention whatsoever that just because you are in private business, that when you take your relatives out for dinner, that is a tax-free event. It isn't. It just isn't. Okay, and I realize that people say it all the time. I realize that you're gonna name off 100 people that are disagreeing with me. They're all wrong. I'm telling you right up, sorry. They're all wrong. Okay. So, if you were a commissioned salesperson or a business person meeting with a client for the purposes of business over a meal, then the client's meal would be deemed promotional, and it can go into your promotional and advertising budget, and it can be a legitimate deduction. Your meal is never a deduction, and taking your girlfriend out for dinner is never a deduction. Okay? So that's the first part. However, there is exceptions for long-haul truck drivers. Okay? And there is definitions, as you can well imagine, there is definitions. For a long-haul truck driver, the trip is more than 160 kilometers one way. If it's less than that, right, like it's a fuel delivery guy and, he might do 200K in a day, but he's not doing 160 kilometers in one direction ever. He's not a long haul driver. Okay, so that's the first qualification. The trip it has to be a single trip, has to be more than 160 kilometers, and then we can start counting. Okay, if you were away for more than 8 hours, then we can generate a meal allowance. If you are away for more than 12 hours, we can generate 2 meal allowances. And to get a third meal allowance, you will have to be a 24-hour trip. That's the way it works. And then as a truck driver, your meal allowances are considerably more lucrative than for the rest of us because your situation is different. And this is all about helping to keep you as a truck driver living on the road in the back of your truck whole with the rest of us. It's not, any kind of a perk for those thinking, well, how come truck drivers get it and I don't get it? Truck drivers need it to remain whole. Remember what the whole point of these forms is, right? He's not getting an advantage. He's just being made whole, okay? You see that calculates itself into here, right? So you don't get to adjust these numbers. You don't get to play with the 50%. It is what it is. Bad debts. If you're new to business, then this is just some basic business advice. You track your bad debts. You have to track your bad debts, okay? You can't just, oh, well, I'm never going to get paid, right? So they have to stay in your books and you have to track them. But after a period of time, bad debts can be written down, right? If you know you're never going to get paid for this, then somewhere in the past, it was already accrued into your income. This is where it gets accrued back out because it's not your fault that the client you happen to be dealing with lacked scruples and general trustworthiness, right? So you're not going to be penalized for being a bad judge of character, is what that says. Insurance. So up here on this part of the form, if you're renting an office, then all your insurances are going to go in here. But if you're going to do a home office, then up here what I'd like to see is what I would put in here for you would be like your errors and omissions insurance rather than your actual building insurance. Because if your office or your business is in your home, we're going to fill out another section of this form further down, and that's where we would put that insurance. If, on the other hand, we're renting a storefront or a shop of some sort, then we're going to put all of our insurances in here. We're just going to add them all together and we're going to put them in here. Interest and bank charges. Okay, so this can be interest on equipment loans. This can be, a lot of things can be added in here, right? So a lot of things feed into these lines. So you see how come myself as a preparer, if I have a client and I work my way all the way through this and most of these boxes are empty, when I get to the bottom, that's when I become concerned that does my client understand all the things that they have a right to? And are they getting back everything they should be getting back? Because one of the things you cannot do is make stuff up, right? There has to be records. It's back to the same thing I'm talking about. I'm showing you what these lines are because I want to help you understand what kind of records you're either going to keep for use yourself or you're going to file away in envelopes or folders or something and bring into us or bring into your tax preparer next year. The right time for any tax preparer or taxpayer to be preparing for next year's taxes is starting right now. But if you're a small business proprietor, absolutely you should be working on your tax preparedness every day of the year. Maybe the day that you go in and see Christina and sign for your tax, maybe you take that day off. The next day, you start preparing for the next year's taxes, right? If you do this stuff day on day on day, it isn't really a big deal. If you fill a giant box full of thermal receipts and attempt to deal with it in December, it is a very big deal, right? And if you want somebody to do that for you, it's twofold. It's if you want somebody else to sort and tabulate your receipts, they're only going to be able to do that job as accurate as their imagination. And the rule for us is, when in doubt, don't put it in, right? The way I can get the most accurate numbers here is with your help. That's how come I'm saying right from the start, this series is about helping you be prepared to mount your own defense. Because again, Canada is a self-assessed nation. We'll be there beside you. We're happy to help you. But it is you that is being questioned, and it is your record keeping that will either sink or swim. Okay? Business taxes, licenses, memberships, like, don't forget any of these things. It might only be $50 here and $125 there, but you know, I've seen this section easily add up to $1,000 or more, right? Depending on where you are, depending on what fees you have to be. If you have to be a member of certain organizations in order for your business to run, this is where it goes. This could be Chamber of Commerce fees. This could be business licenses. This can be, you know, practically anything. Office expenses, I don't think we need to talk that much about it, other than, as you can see, I don't really know the reason why, but the CRA would rather see stationery and supplies separated out from general expenses. So I'm going to put your software costs in here, for instance, but I'm going to put the boxes of paper you buy in here. So that's just as simple as that. It doesn't even necessarily matter why they want it separated out. Just if they ask you to separate it out, why not do it? Right? You know, who gets more success at hearing a yes? The people that are cooperative. So it's always best to approach the CRA and tax filing in a cooperative state of mind. Because I'll tell you, we've had this business for over 12 years now, and I can tell you, not one single belligerent tax-paying client has been successful in that approach. Maybe in another 12 years, I'll gain that experience too, but I wouldn't expect so. Professional fees, that can be me, right? But it can be a lot of things. It can be lawyers. It can be, you know, I have to imagine maybe you're running some kind of an environmental reclamation business. And I would imagine if you're running an environmental reclamation business, that at times you're going to have to hire surveyors, right? That's going to go in as a professional fee. Surveyors are professionals, and their fees are going to go in here as professional fees. Do you have to, you know, is a part of your business running remotely, and do you have to pay management and administration fees because of that? So rent, maybe you're renting a building, maybe you're running a home office, but there's also lots of different kinds of companies that cost my desk that rent some of their higher dollar equipment. So those rental fees would go in here, okay? Repairs and maintenance, you all know what that is. Salaries, including the employer's contribution. So if you have employees and you're paying them a salary, then what goes in here is their salary plus their CPP plus their EI. So all of that portion, but not the withholding portion from the CPP and EI that they paid for themselves. Okay, if you paid people commissions or allowances or bonuses, that number needs to go in here. Okay, and when I say paid people, that can be you that we're talking about as well. Property taxes, straight up. Traveling expenses. Okay, here's another one that gets endless number of people in trouble. Again, now we're going to do things different. Instead of saying it first, I'm going to ask you to read it first. It does say traveling expenses at the top, but keep reading, right? Before you run into the back and gather up all those receipts for the family vacation to Cancun, keep reading. Traveling expenses for moving. Did you move to where you are to start this company? Is that the reason? Then maybe those moving expenses are legit, okay? Are you in the type of business that convention attendance, you know, there are businesses where if you're not attending your conventions, I'm not saying your business won't succeed, but it's probably not going to blossom. So the government recognizes that those types of businesses, those are legitimate expenses. This is money people have to pay. So Here's why I'm going on about this, is sometimes people find this upsetting, and I have run into people that find this upsetting. So the convention that Sally has to go to every year is in Las Vegas. And Sally's friend Jill also wants to go to Las Vegas, but she's not going to a convention, but she wants her trip to Las Vegas to be tax-free as well because Sally's it. Well, that's not the way it works. Sally didn't go to Las Vegas to gamble and eat and have fun. Sally went to go to a convention. And I guess it's unfortunate for all the rest of us that so many conventions like to be in places like, the Vancouver waterfront or Las Vegas, but it doesn't mean that that taxpayer is getting a perk that you're not getting. That taxpayer has an unavoidable expense that you don't have. And therefore, we're going to allow them to have that expense with pre-tax dollars. That's what we're going to allow to try to make them equal to you. Not because they're getting something that you're not getting, right? So that's a little, again, when you sit in the coffee circle, when you sit at the breakfast club and you start discussing things like this, it can get your passions up. It can get people running down a tangent, down a road that there's just no reason for, because what they're hearing has nothing to do with their tax situation. Okay? So that's where we are on travel expenses. This is not your family vacation. There is, and I talked about it on the T2225, there is nothing under Canadian tax law that says any single Canadian taxpayer is special enough to have the right to tax-free vacations. Doesn't matter whether you're a business person, doesn't matter whether you're a northern resident, that is not how it's done. Okay? Utilities, straight up. Now, here's what I want to say. You will use this section if you're renting. Okay? If you're not renting, if you're running your business on your own property, then we're going to catch those costs further down the form. Fuel costs that have nothing to do with motor vehicles, there's obviously some types of businesses that do have those kind of costs. They would go in here. All pretty straightforward. Motor vehicle expenses. I almost want to leave that and come back to it, but we're going to jump there right now. Motor vehicle expenses are coming in on this gray box. So what do we know about the gray boxes? It means that we're not going to type a number in here, right? So we don't just get to make up our motor vehicle expenses. We have to generate a number, and we're going to use the T2125 calculating vehicle expenses for business use purposes forms. Okay? So right off the bat, if there's two of you, if you're both using the vehicle, if you're partners in the business, then let's check this box. Okay? I'm coming to the conclusion, the longer and longer I do this, that the more information you try to withhold from CRA, the more likely it is that your tax picture is not going to go the way you want it to go. So you see that there's three lines here. You'll note that this form looks very, very similar to the 777 auto that we looked at in our very first one of these videos. If you're using more than one vehicle in your business, then you should fill this part out properly, right? So, maybe you have a pickup truck and your wife has a car or whatever. I don't need to go to the specific examples, but if you use more than one vehicle, fill this out. And I'm just going to give you a simple idea why. Remember what I keep saying about your assessor at the CRA is every bit as clever as you and me. Remember, I keep saying that, and I keep saying it because it's the truth. Whether you want to believe it or not, it's the truth. Okay? So, how clever do you really need to be? Like a pickup truck, for instance, say an F450. Typically that vehicle is going to take 120 or more liters of fuel every time it fills up. Whereas a little Honda Civic maybe is going to perhaps take 55 or 60 liters of fuel every time it fills up. So understand that through no fault of your own or your taxpayer's thing, everybody that files these forms sooner or later sits through reassessment. It's just the way our tax system works, right? We're self-assessed. We're telling the government that we're being honest and forthcoming about our true picture, but they need to do their due diligence, and every now and then they check back. So how hard is it when you get the gas receipts, the photocopied gas receipts, remember, because you already know you're not going to send an envelope of thermal receipts to the CRA assessor because he's just going to reject them. So you've got that. He's flipping through them, and he's got like 117 liters, 122 liters, 118 liters, 52 liters, 118 liters, 120 liters, 51 liters. How difficult is it for him to ask you, is there any chance that, maybe your wife's vehicle receipt somehow accidentally got into this, right? Because understand this, having a vehicle claim doesn't mean that every drop of gasoline that you ran in any vehicle, including your lawnmower, is suddenly tax-free. That's not what it means. And the system works against it. Like, that's why I say, where you don't want to take shortcuts, you want to fill out every box, because if you don't, you're gonna be in a situation where you cannot defend yourself. So that's the multiple vehicles thing, right? Make sure you use them. If it's a partnership vehicle, meaning you don't own it, and he doesn't own it, but the company owns it, that needs to be recorded too, okay? So now we're down to the part, I'm sure some of you have been waiting for this. We're back to the least favored thing I say in this office. And I think I mentioned before that even my friends don't like it when I say it. However, just as last time, I'm going to insist that this is the absolute bald-faced truth. Therefore, I am going to keep saying it over and over again, because not saying it out loud isn't going to make wishes come true. If you have a legitimate automobile expense, you have an automobile logbook. Let me word that the other way. If there is no automobile logbook, there is no legitimate automobile expense. Now, considering, depending on the business, how big of an expense this can add up to, the difficulty and minor issues with keeping a vehicle logbook would seem to be worth it to me, and I'm advising that it's worth it to you too, right? And I will say the other thing. So at MCR, we don't have that big of a vehicle use. We do have some clients that we go to see in their home, and we bring the business to them. So early on, for the first 5 or 6 years, we were keeping all these logbooks. And eventually we came to the point where our business use of the vehicle was such a small percentage that we made the choice to quit making a vehicle claim. The amount of work we were putting into the vehicle claim wasn't paying off. That's a legitimate choice to make. But if you are going to make a vehicle claim, then it's very, very important that you do it correctly, right? And correctly starts with logbook. So your logbook, at the very least, you write down your odometer reading on each of these vehicles. So if you have 3 vehicles you're going to be using in the company, I'm going to be advising that you need 3 logbooks. If you have 2 vehicles, you need 2 logbooks. The logbook should stay with the vehicle, or it can be electronic. There is excellent logbooks for these things nowadays, right? So there's lots of different ways to approach this. There isn't one way that's right, other than attempting to make a vehicle claim without a vehicle logbook is 100% wrong, okay? So the total number of kilometers driven to earn business income. So I'll tell you how the CRA assessors like to see this in your logbook. It's not, there is other ways around it, but how they like to see it is they like to see you get in the car and you write down your mileage on your odometer. And then you do your business, and then you write down the mileage on the odometer. So that's the mileage in, the mileage out. And that becomes the business use for that particular trip. That's how they like to see it. It's also legitimate. You know, you have that little button on your dash and you got your trip odometer. You can use your trip odometer and record, you know, that just gives you a straight kilometers, right? But if you're using that, it becomes even more important that your odometer readings are recorded at the beginning and end of every year, right? So that there's a context to put all of this in, right? Because the odometer readings are going to give the total number of kilometers the vehicle's seen in the year, and this top number is going to be the percentage that was business use. And you know what? Maybe this is your main vehicle, and this ends up being, you know, 80% use, and then once in a while you use the spouse's car, and this ends up being 10% use. And maybe, you know, for a period of time, in the summer you had to borrow a car from your kid, or you had to rent a car or something in order to keep the business running. In any event, you're going to keep it all separate. You're going to keep good, solid, permanent records. Okay, so now we're down to the actual expenses themselves. So I think pretty much everybody understands that fuel is an expense, to the point, as I've talked about before, that people sometimes like to slip a lot more fuel in there. So understand that in this modern world of computer algorithms, we're reporting our actual mileage, right? So in addition to the physical observation of how come sometimes your fuel tank is way smaller than other times, in addition to that, the algorithm has a pretty good idea how much fuel any vehicle should use to travel X amount of kilometers, okay? What I do want to say about your fuel is I want all of your fuel, right? Let's go back up here. These two numbers that I harped on, how important they are, this now controls everything going down on this form. So where I see a completely honest mistake being made regularly, and it's heartbreaking because it costs you a lot of money when you do that, is people get down to here and then they start trying to do the calculations and stuff. So they're putting in the fuel they think they use specifically for business, et cetera, et cetera. Don't do that. It's not how this form is meant to work. Put all of your fuel, save all of your fuel for the entire year, and put all of your fuel separated only by vehicle, right? So that little Honda Civic is going to go here. That big Ford F450 is going to go here, et cetera, et cetera. Keep those things straight, right? And keep them in line, keep them honest, right? Like if you add all of your brother's fuel in here, you're going to get called out, right? It won't match up with your mileage. It's pretty straightforward. So a big part of people understanding what not to try to get away with is understanding that what this modern world means and what the power of a computer algorithm really is. Okay? Interest payments, you see they're calculated from further down the chart. It says in chart B below. That's how those will come back. Now that number, I'm not sure if this would be on here in the current interest picture, if that's always. This number goes way back to, like most of you probably remember, in the mid 80s, we were looking at interest rates. If you wanted to buy a vehicle, it wasn't unusual to be paying 18+%. So at that time, the CRA wanted to have some controls on how much interest a vehicle could have on it. Okay? Interest on motor vehicles other than your automobile. You know, so that's not really going to apply that much in these types of businesses, but there are places where that could come up, and you will know if it does. Insurance. So remember I told you at the top, I didn't want you to put your motor vehicle insurance at the top, right? Well, I said that about your office insurance. The same thing is about your motor vehicle insurance. Don't put that up there in that top list. Put it in each of these boxes. For each of these vehicles, put your insurance for the year into these boxes. Again, just trust the algorithm, right? Everything is going to be based on these numbers, right? You know, whether this is 50 and this is 10 and this is 25, it's all going to work out for you. Okay, so all of your insurances go in there. License and registration. If you live in a district that separates those, where we live, that's typically all one and the same. Repairs and maintenance. Okay, keep in mind, repairs and maintenance usually has a lot of detail, right? On the garages usually write down things like odometer readings. Most garages write down the odometer reading when they got the car and the odometer reading when they gave it back, just simply to prove that they didn't go joyriding in your vehicle. They write down the make, they write down the model. So now if you're reassessed and the document that you have sitting in here doesn't match the vehicle that you have it sitting in, right? You see how that goes. The more you go through this, the more straight up, it's exactly how you would do it if you were in charge. It's viewed the same way. So you could have other expenses associated with your vehicle, like maybe you got to buy a special deck for it, or maybe you got to run a high-up on your truck, or because maybe the things that you make are really big, and then to deliver them to your client, you need some kind of hydraulic lifting device or something like that. So that would have its own expenses and stuff that don't fit neatly into here. That's the kind of thing that you're going to put in there. You're going to keep good records, you're going to be specific, and you're going to be prepared to defend that cost. Parking fees, yeah, you never see that around where I live, but if I was practicing in the city, yeah, I bet we'd see a lot of those. We don't. If you have any additional insurances, right, again, just follow along, right? Reimbursements, rebates, these are everything we just covered. If you have any of these vehicle costs, then you need to keep those bills and you need to keep those records, okay? I'm not going to go through the leasing form in detail, other than I want to say this, okay? There is a prevalent statement being made out there, and I hear it all the time, and I'm sure you've heard it before too, that says, if you're in any kind of a job where you get to claim your vehicle, you should lease a vehicle, because then the CRA won't argue with you. They're just going to 100% grant you all of your vehicle expenses, and it's going to be way easier than if you own a car. I'm only going to just show you this part of the form so you can see quite plainly that is not true, right? Even the amount of your lease is limited, right? And the amount of your lease payment is limited, just like the expense of your car. We're going to touch on that when we get to CCA. This $30,000 number turns out to be a really important number to the CRA, and it's a standing joke amongst tax preparers throughout Canada these days. So again, you're tracking each individual vehicle down, all the way down, okay? Now we get into the capital cost allowances. So you're going to fill those out further on down the form, but what you need to understand about capital cost allowances, well, if it's a zero emission vehicle, then it has special rules. Okay, I should have said that first. I actually don't have any zero emission vehicle clients yet, but I'm sure we will have. Okay, so you get special deals there, and that information is what's going in here, right? Information related to zero emission vehicles. And zero emission vehicles are rated as a class 10, not restricted to a 10.1, which is going to make more sense to you coming right up. So now we're getting down to the CCA classifications for your vehicle, right? If it's an electric vehicle, it goes in here. This is the only place you're going to put your CCA in on this form, right? So all of those numbers come back, are calculated by percentage, and the sum of the three, if you had three, feeds off the work chart into here and becomes a direct deduction, not including your CCA. We're gonna touch on the capital cost allowance in a second here. Okay? I've got some numbers in here from some stuff I was playing around with earlier before I started this, so we're gonna take a look at what that has. So I imagined when I was playing around with this that this company has a building which is a CCA class 1, and that building was $250,000. I imagined that this company that you're running needed to buy some basic equipment to practice their whatever it is they do, and that ran $75,000. Some of it was used, some of it was new, doesn't matter. All that matters is what your cost was, right? And that gave a CCA class of 8, okay? Then they bought a vehicle, and the vehicle was a CCA class 10.1. As almost all passenger vehicles nowadays will end up being classed as a 10.1 vehicle. And why that's important is class 10.1 vehicles are restricted as to how much they were allowed to cost, right? So it restricts the amount of money that can come back, okay? So all of these numbers, right, as you see, added together and fed back all the way up here into our capital cost allowances, right? Fed into this gray box, $48,000. Okay, so now, this is why I'm saying that one of the things you need to do as a proprietorship small business is do all of these detail things, because this is how huge this can add up. This $48,000 for this imagined company on this first year of this imagined company's business will be deducted right off the top of their earnings, right? I mean, I didn't put any earnings in, so you can see, since I left the top at zero, now I have minus $48,000. So in the first year of this company, that top number, this might really have been zero, right? We might not have made any money. Maybe we only even really got the doors open by the 15th of December, and what we sell is mainly a summer thing. In any event, we end up at negative $48,000, right? That is the net loss that this company has suffered, okay? That can be useful to you down the road, right? Remember what I said earlier. The reason you need to keep these records, even when you're not going to have anything to deduct them against, is, you know, surely you're sooner or later going to have something to deduct it against. Because remember our talk about fake businesses and how the government feels about fake businesses. You're not going to do that, right? So this is a legitimate business. You are planning to make money on it. So you do want to follow these things through, okay? The rest of the form, not much. I mean, if you had partners, you would fill in your details of your partnership, net losses, okay? And then we come down to the in-home expenses. So this is the last big piece. If you're not renting a storefront or a shop, and you're, right, we have two offices. So this office that I'm working in is a part of our home property, right? It's a separate building, right? And so the entire building is devoted to the office, but this building is a part of the home property. Our other office is standalone on a piece of commercial property, okay? So it's going to be 100%. So for this office, we do a home office calculation. For the other office, we would do a straight office calculation. Okay. The total house area square feet. Now that says the house, but let's say what you're actually doing is you have the house, but you have this 1,100 square foot building. Maybe it was a garage or something was what it was when you bought the place, but that's what you've converted into your business. Your office is in there, all your equipment's in there, your storefront's in there, and that whole building. So let's say that your house was 2,000 square feet and that building is 1,000 square feet. Okay, so together they would be 3,000 square feet, right? And your building would be 1,000 square feet. So that's as straightforward as that works, right? These numbers are important. You have to have them, right? Because if you get assessed and these numbers are faked and you've just forced a fake percentage in here, they're going to call you out. And when you get called out, either you got a way to defend yourself or you lose the claim, right? So where I see some errors now, and this is all the best intentions of mice and men, as they say, don't try to prorate this, right? That's not how this part of the form works. What we want here is your total heating bill for all the property, your total heating bill. Don't try to figure out the part that you used in this 1,000 square feet. Give me the total amount of, in this area it'd be natural gas burned. Okay? Same with the electricity. Same with the home insurance. Same with your maintenance bills. Same with your mortgage interest. Same with your property taxes. The whole thing goes in here because this number up here, it's going to do the calculation, right? So you've got to put the whole number in. Otherwise, when it does the calculation, you're going to get way, way less than what you should have got. Any other specific expenses, your business, you might have had to do some very specific things because of the type of business you have. Remember, this is not a T2200, so you will be able to, as long as you clearly specify what this is and you have the proper records, you have every likelihood of being able to win acceptance of that expense. Okay? So then we just keep on coming down here. And it calculates all the numbers out for us, and it gives us a total area. And you know what? You could have had a capital cost on your home, might have inserted in there as well. Okay? And that, my friends, is as easy as it gets. That is the 2125. It is one of the biggest undertakings in the Canadian personal tax system. I am going to say that the 2048 for farm incomes has, yet another level of complexity, but you're going to find when we move on to that one that it's following all these same principles. And just as the principles we discussed in the 2200 carried forward to the 2222 and carried forward to the 2125. Remember what we're trying to do here. We're trying to keep all Canadian taxpayers whole, meaning equal to that standard T4 earning taxpayer that we've decided to call Terry and Teresa. And we're trying to avoid double taxation in all cases, all the way along the way. So those two things work together, and if you do it all properly, it in most cases has a significant impact in your profitability and in your taxes owed. And in all cases, if you don't practice the hygiene to get there, you likely are not going to get the full measure of your rightful claims on your business. I don't know how any other way to put this. It's really, as I work my way through these forms, it just keeps boiling down to that one thing. Financial hygiene, right? So what I'm getting at here is that the same practices that I'm showing you or attempting to show you are necessary to get your best possible tax picture as a sole proprietor. Those same principles of financial hygiene are also what's necessary to be successful in business in the first place. I mean, record keeping is kind of like the circulatory, the blood circulation system of any business. If you don't have solid, meaningful record keeping, then if your company is a success, it is entirely by accident, and that, I'm sure, is not how you intend to run this business. So really, financial hygiene improves your tax picture by improving your tax preparedness, but it is also the basic discipline of running a small business successfully, right? You got to know where your revenues come from. You got to know where your expenses are going. You got to know how it all works out. There just is no shortcuts when it comes to running your own business. And I suppose a lot of the people that would rather not get involved in those things gravitate instead to T4 earnings. Thank you so much for your time. I'll be coming back to you in a short time, maybe a week or so, with a 2048, and we'll talk a little bit about what it takes to run a successful farm in this country and what that financial hygiene looks like. But for now, stay safe. Start keeping your records today. Next time you fill up your car with gas, photocopy the thermal. Have a nice day. Bye.